Yes, as for the March monetary policy meeting, I think some board members may vote against it. They may want to see more hard data for the recovery. But I think today Rengo will announce the first tabulation results. And we are expecting an average 5.2% increase in the wages, including the so-called seniority portion. Excluding the seniority portion, it's going to be 3.5%, and that's going to be a big increase from last year. So I think that should support private consumption and also service inflation going ahead. So I think the majority of board members would, would agree to change monetary policy at the March monetary policy meeting, in my view.
Finance Minister Shunichi Suzuki has said earlier this week that the Japanese economy has not completely overcome deflation yet. I know that he's finance minister, so monetary policy isn't his wheelhouse, of course, but is that going to have any bearing on the calculus of the BOJ and the normalization timeline?
Yes, we think the government may formally announce exit from deflation this year, but the government has its own standards or definitions, and I think one of the issues is that Japanese output gap estimate is still slightly negative, but in our view, I think we did some empirical analysis about the pass-through between prices and wages to prices, and research shows that there's a virtuous cycle between prices and wages. So we believe that Japan is already out of deflation, and I think that this strong wage negotiation results will shift Japan away from the deflationary equilibrium or low inflation equilibrium toward a normal economy with mild inflation.
Takeshi-san, the price action, we've got dollar-yen. Yen continues to weaken even further, 148 1/3 or so. The Japanese 10, though, bounced. It's now at 0.79. And my question to you is the market mispricing the likelihood, which you and I agree on, that the BOJ is going to abandon YCC and NERP next Tuesday?
I'm an economist, but my sense is that I think the market probably already priced in the BOJ will move either in March or April. That's not a major difference. But the problem is what happens after BOJ removes a negative interest rate policy. We do expect additional rate hike coming in July, because Japanese inflation will likely remain solid, especially in the April-June quarter. We expect the so-called Japan-style core CPI to remain above 2.5%. Due to the solid service inflation on the back of wage increases, but that may not be fully priced in the market. That's my impression as an economist.
All right. How much of a jump, assuming you and I are right, they move next Tuesday, right? Abandon YCC, abandon negative rates. How much is the yen going to jump? One, and what about JGBs? And right now we're almost at 0.8, 0.79 right now. Where do you think fair value is for the Japanese yen? Is it 1% even, 100 basis points?
So BOJ will get rid of the YCC and around 0% reference or target, on 10-year JGBs. But at the same time, what we are expecting that BOJ will likely start to provide some kind of a guidance on the pace of JGB purchases. And what we are expecting is that the pace of slightly below 6 trillion yen per month, which is exactly the same the purchasing pace right now. So I think in the near term, I think BOJ will maintain its balance sheet size. They will keep buying long-term JGBs going ahead, despite the abolishment of YCC. So we don't expect a big jump in 10-year JGBs, despite the BOJ abolishing YCC.
Yamaguchi-san, and once the BOJ does start this process of exiting from ultra-loose policy, and of course it's going to be very carefully calibrated, is there the potential, though, for any financial instability, especially in the stock market, given the Bank of Japan has been a big buyer, a major buyer of equity ETFs?
Yes. So as for long-term interest rates, as I said, we don't expect a big jump. I think a BOJ will not enter rate hike cycle as the Fed did. They will avoid aggressive rate hikes. That's what we are expecting. So I think the impact on the financial sector should be limited. As for equity ETF purchases, I think BOJ already almost stopped new buying already. I think recently there was a sharp decline, more than I think a 2% decline in the morning session, but BOJ didn't purchase ETFs. And my sense is that I think BOJ no longer purchasing ETFs, maybe already priced in. And what we are expecting that BOJ will not likely sell what they already bought. So I think equity ETFs will likely remain on the BOJ's balance sheet for extended period. So if that's the case, then I think the negative impact on the market should be limited.
Takeshi, as an economist, I'm sure you thought about this. Let's talk about the last piece of the puzzle, the missing link, before the BOJ makes a decision to exit, right? And that is sustained or sustainable wage growth. We both know that, the Shunto, the headline number that we're going to see later today, doesn't always end up being the final number that workers actually get. It happens every year. That's one. Two, when 40% of the labor force are not salaried workers who enjoy that, whatever it ends up being, 5% or more a wage hike, but they're guys that work at 7-Eleven and get paid by the hour. How much is this actually going to help the economy and help consumption in Japan, do you think?
Right. So the first result of the spring wage negotiation is mainly about large companies, and many smaller companies don't even have labor unions. But historically speaking, the spring wage negotiation results set the kind of standards so that affect wage growth of smaller companies. So we are I think optimistic about the overall wage increase. Although I think the final increase will be slightly lower than the initial results. That includes mainly large companies. But another issue is that I think low productivity companies with deflationary business models may suffer from wage increases, and some of them may exit the market. But I think some people say zombie companies, and I think they are exiting the market may not necessarily be bad for the overall I think productivity growth of the economy. I think.